Morning traders, it's the 9th of September. I'm Joe Neighbour talking ball for Signal Centre today, all by myself, no Steve as he's off on annual leave. So going to be a brief run through some charts, some latest headlines and what to expect from the day ahead when it comes to trading. So first up, in terms of the latest news, we've got the ECB today. That's front and centre of pretty much everything that's happening, and they'll be deciding later whether or not the recovery that's happened over recent months is strong enough to warrant an imminent slowdown in monetary stimulus. So we'll be waiting to see what happens there. Policymakers are due to settle on how much bond buying the economy will need in the fourth quarter, weighing up the risks to the outlook, such as the Delta variant and also the supply chain bottlenecks. So their conclusion will be also based on a fresh and closely watched set of economic projections. So we'll be waiting to see what happens there at around about 1:30 today. In terms of what's going on elsewhere across the globe at the moment, in the UK, the property market entered a lull in August, with the survey showing a slowdown in sales and easing demand. In terms of what's happening with China, technology stocks slid after officials told firms including Tencent Holding and NetEase to end their focus on profit in gaming. So a little bit of a concern. They're saying it's causing some unhealthy tendencies such as money worship and effimacy. So we'll have to wait and see what happens there, but that is obviously big business globally. In terms of what's going on in other Asian markets, we have seen a little bit of a pullback overnight. A few little bits of concern with regards to global growth and, of course, what's going on with the Delta variant. So a little bit of a weaker start today across a number of assets. We'll come on to the charts now. I'm going to start off today with FX. So just bring that up. This is the dollar index, which is often my starting point when it comes to analysing foreign exchange markets. So as it stands, yesterday we saw continued strength in the dollar index, having broken out of this minor corrective channel that's been posted. So we saw the breakout on the 7th. We saw a continuation higher yesterday, giving a little bit back this morning as we settle into the opening trade in Europe. But all in all, looks pretty well set to continue higher, in my opinion, in the very short term, to go and challenge these resistance levels that we have up here between 93.43 to 93.73. So as I mentioned, we've got this ECB number later today. So the decision at 12:45, the press conference at 1:30. And we've also got some initial jobless claims data due out today at 1:30, which may have an impact on the dollar index throughout the trading session. If we flip over to euro dollar, obviously the flip side of what we see on the dollar index chart, as we can see, we've had this corrective channel higher in the very short term. We have broken out of that, as you can see, the breakout of this yellow channel. Further weakness yesterday, bit of buying support today, although hardly sort of gaining back what we have lost over the last few sessions. So for me, we look set to move down towards the support levels here between 1.1704 to 1.1668. So these is where, well, this is where I expect price to go. And we'll be looking to sell rallies on these on euro dollar today. Looking across elsewhere, I've been talking quite a bit about riskier assets like Aussie and New Zealand dollar. They had some really sharp moves to the upside in recent weeks, as you can see here, as projected by this really sharp red uptrend line that I've got drawn on the charts. Aussie yen rallied into a cluster of resistance levels. It broke down from a top pattern or a range pattern a number of weeks back. And we've just seen a retest of that now, and we've seen a sell-off emerge. So we've seen currently 3 down days in a row in terms of closed sessions. We've got a fourth potentially forming today. Obviously, it's very early in the session. There are a couple of big events today which could change things. But for me, it looks as though we are going to see a continuation lower here, and I would be looking for lower prices. Ultimately, a test of this recent swing low that we saw posted on the 20th of August down at 77.89. If we look at Aussie dollar, similar kind of situation in that we saw a big corrective move to the upside. We ran into a cluster of resistance levels. We had a couple of fib levels here, a couple of 38.2 fib levels from these recent highs, which seem to have done a job. We've also broken down below this short-term trend line. And for me, look to be heading lower in the short term. So I would be looking to target, again, these swing lows down at 71.06 on Aussie US dollar today. Euro sterling, been a bit mixed and flat, and that's been the case for some time now. Really, it is trending lower on the longer term time frames. In the short term, we are seeing lower highs and lower lows. So for me, we've rallied into some resistance levels here, the sort of top end of this short term downtrend. Also got a resistance line drawn in here at 86.20. We've seen a number of sort of long wick candles in recent days, maybe a shooting star posted there. Further selling seen yesterday, pretty flat as we speak at the moment. So for me, I would be looking to sell rallies here, expecting a move down towards these levels around about what we got 84.40ish, 84.50. Now, this could be sort of front and center today with the ECB, so there could be some, some price movement there that will give traders a chance of making a few extra pounds. If we look at cable, really not much going on here. It's sort of a big battle between sort of what's going on with sterling and US dollar, and they're kind of cancelling each other out. You could argue we are forming a bit of a top here, but price action is very choppy. Yes, we do have a short-term downtrend, so the bias probably remains to the downside in the very short term. And in terms of where we can expect that to challenge, we've got key support at 135.71. Looking at New Zealand dollar versus the US dollar, New Zealand dollar really sort of outstripped what we saw from the Aussie, actually, when you compare the two risk assets together. Big sharp move to the upside, although rallied into downtrend resistance. So we do have a sequence of lower highs and also lower lows as well. So we rallied into a cluster of resistance levels. We are posting some small gains today, but I ultimately think this will fail. We will see a continuation lower. And my targets on the downside over the short to medium term is down at 0.6804 on New Zealand dollar, US dollar. So that pretty much rounds up what I'm looking at on the FX markets. Of course, this is just a general overview because I haven't got my sidekick Steve to help me crunch through a number of charts. Let's get onto Bitcoin. So that's staging a tiny bit of a recovery today. It's only up by 0.3%, and as we know, it's a volatile asset and that can change very quickly. But we have seen, as a result of what's gone on with El Salvador and trying to adopt the currency as legal tender, it's come into some problems. It's rallied into these resistance levels just above that 61.8% fib level at 51,109. We've broken down below a short-term trend line with quite an impulsive move lower, and so far we have been unable to retake those gains. There was quite a bit of volume increase on the selling as well, which I would note. But it looks as though the shine may have come off Bitcoin in the very short term, and we could maybe see a corrective move to the downside. In terms of big technical targets, 30,000 still remains a very big line in the sand. Obviously, it's done a lot to get up to these levels, so whether or not it will get down there again, we'll have to wait and see. But I do expect some choppy price action, and the technicals aren't particularly clear at the moment. So be careful if you are trading Bitcoin in a short-term manner. Looking over at some of the commodities then, so oil obviously had this big drive higher, as you can see, within this bullish channel. And at the moment, we're trading within a corrective channel, and we seem to have found some resistance at the top end of that, around about $70.40. We may continue to see some chop or some further downside towards the support levels at the lower end of the corrective channel. However, given the strength of the uptrend, maybe what we're actually seeing here is a consolidation or the formation of maybe a bullish flag, which if it does break to the upside, so above this 70.40 level, then what we could easily see is a continuation higher of the dominant trend there and further prices. We do have the EIA crude inventories number today, which is at 4 p.m. In the UK. Stockpiles expected to fall by 7.17 million barrels in the preceding week. So we'll have to wait and see what happens there. There could be some volatility in oil. Ultimately, I think I'm bullish overall, and I believe that we could be in the process of this consolidation, which is forming a bullish flag. 70.40 is the key level to watch on the upside. Looking at gold, well, that's been a bit choppy as well. It's rallied into some resistance at 1834. Seems to be sort of holding back the bulls for the time being. We are trading in a corrective channel here as well. I think the underlying strength of the asset is still pretty strong. This is a daily chart. As you can see, we've come a long way. So we are correcting. And while we're in that process, there could be more sort of sideways choppy price action. So it could be a difficult market to call in the very short term. I think ultimately, if we can break above this sort of this range of resistance between 1834 to 1845, then we will look for a continuation higher as this was just a consolidation within a longer term uptrend. So ultimately bullish on gold, but think in the short term opportunities may be limited and price action could be quite choppy. So be careful if you are involved in that asset today. Now we move on to the stock indices, which have got off to a pretty rough start. So first up, FTSE 100, as that's our domestic market here in the UK. Bit of news out from some big corporates, particularly EasyJet. They are they've announced a rights issue. They're going to be raising some more money in order to boost their financial circumstances, given the detriment of the pandemic. Interestingly, here on the FTSE 100, price action's obviously been ascending for a number of months, but it does appear to have stalled into this 72.35 level. And now what we're seeing is a break of the short-term trend. And that's posted here from the lows that we saw in October. We've taken out this level. We closed below it yesterday, and we're backing that up with further weakness today. So in the short term, there is potential for an even deeper correction towards this longer term uptrend line, which we have to go back to the lows that we posted back in March at the height of the pandemic last year. And if we take that line and also this key swing low that we posted on the 19th of July, then we do have a kind of combination of levels that could be coming together around about 68.25. So there is potential for this to correct down to these kind of levels. I don't think that would be a bad thing, given how maybe overdone some of these markets are, and it will allow the certain stocks to create some value for investors that have been sat on the sidelines or are waiting to put cash to work. So any kind of correction here, I think, would be ultimately a healthy one. I don't envisage it at the moment evolving into anything more sinister, like an even deeper correction of 20% plus, but we'll have to wait and see. If this level fails to hold, then the next key level for me would be down at this 38.2% Fibonacci level, which comes in at 65.68. Okay, looking at the DAX, that again suffered as well. We've broken the short-term trend line. We did that a few days ago. Lots of choppy price action here, really sort of narrow ranges and quite spiky price actions been forming in recent days. And now that's culminated in a break of this swing low that we posted on the 19th of August. We are below this at the moment, but there's a long way to go in this trading session. And there's a lot of high impact data out today, which could change the picture here. But for me, if it continues to trade lower and below this support at 15,623, then it could potentially spark a correction down towards the 15,000 level. Again, I don't think it will be anything major to worry about. I'm not sure it's going to evolve into a sort of an official correction, if you like, in the markets of down by 20% plus, but obviously we never know. There could be a number of factors that change to alter the picture, but this is the short-term uptrend line. If we want to look even further back, then obviously we've got the pandemic lows down in March here, and it's got plenty to do. It's done plenty already, and there is plenty of room for a decent corrective move. Again, like the FTSE, the 38.2% level is always a key level to watch for a healthy correction. That won't feel pretty healthy because that's obviously quite a big move lower than it needs to make to get down to those levels, and that will probably induce some panic in the market. But we'll have to wait and see. There's a number of support levels that need to be taken out before we have any concerns about that. Looking at US markets quickly, they seem to be in pretty good health still. Yes, the Nasdaq has stalled a little bit. Obviously, this is a tech-heavy index in the US. Still got a way to go before it tests this short-term trend line. Obviously, the strength in the US markets has been fantastic, and any dips tend to be bought pretty aggressively. So any dip down towards this trend line will represent a decent opportunity to buy, in my opinion. I don't think there's anything majorly to worry about at this stage, but any dip back would allow some value creation in some stocks and certainly in the index itself. Looking at the broader index in the US, the S&P 500 stocks as opposed to 100, and obviously more focused on a range of different industries. This is looking a little bit interesting because we've got this trend line, as you can see. We haven't broken it. We haven't tested it just yet, although we're getting very close. Previous tests of this trend line have proved to be pretty good opportunities to buy, but the bounces from the trend line are becoming a bit narrower. So maybe a little bit of a concern. If this trend line does break on a closing basis on the daily chart, then it easily could spark some sort of corrective move to the downside. But there are plenty of supports that can be targeted on the way down. If you just take these swing lows here, as a quick example, then there is plenty of support on offer, and any move down really towards sort of 4,000 potentially would just, for me, be an opportunity to create some value for shareholders that have been on the sidelines or are waiting to put some cash to work. So you could argue that a correction is long overdue in some of these equity markets. Looking a little bit ominous, but nothing to be overly concerned with at the moment. But it could be maybe worthwhile, if we do see a break of this trend line, grabbing some profits if you are exposed to US stocks, and maybe having to rethink and trying to buy these back a little bit lower. Finally, I'm going to finish off with the Dow. That is obviously fresh off of sort of recent all-time highs. Price action is stalling a bit. You can see there's a cluster of candles in recent days and weeks that have been very narrow indeed. Probably seasonal. We've just come out of the summer months and the summer holidays for most of the Western markets, and that can cause a slowdown in volumes and volatility. So keeping a watching brief on this for now. I haven't got any trend lines drawn in this at the moment. I'll update my charts tomorrow. With that, I mean, just crudely having a look and eyeballing it now. I'll stick that on there. So we've got a couple of touch points, and you could argue that we have broken the trend support there. There's nothing impulsive to the downside that has got me overly worried. But again, like the S&P, there are a number of swing lows to potentially target and a number of sort of support levels to keep in mind here. And again, any correction lower in these US markets, I think, would just be a bit of froth coming off the top and quite healthy in the grand scheme of things. So that's it on the chart front. Now we have a quick look at the gun to the head challenge yesterday. So this is where I make a call live on the video. Yesterday I went short of New Zealand dollar, US dollar. It's the third day in a row that I've done that actually. So I've been banging that drum all week essentially. I finished down 11 ticks on that at the close, down 0.41 R. So a bit of a loss yesterday, but thankfully still ahead based on the last two sessions. So what have I got today? Well, as always with these trades, I look on a more shorter term basis to try and come up with trade ideas using a sort of variety of techniques. But this one I think looks quite interesting for me today. It's the Dow Jones. We've had a bit of a corrective move. I just said obviously there is potential for a corrective dip, but so often when it comes to equity markets, we see dip buys step back in. So I've got some support down here at 34,793, and it seems to have done a pretty decent job. We've formed a nice looking hammer candle over the last hour or so, and we're backing that up with further gains. So I'm going to have a go at this today, because when the corrective moves to the upside happen on the US markets, they tend to be pretty aggressive and pretty strong. So let's have a quick look at what we can fashion here. So I'm going to buy the Dow at 34,940. I'm going to put a stop loss just below this swing low that we posted an hour ago at 34,784, and then I'm going to target a move up to the underside of these previous lows here at 35,270, which gives me just a tad over 2R. Typically, I'd look for more reward for the risk that I'm taking on these trades, but I've got a gun to my head, and this was the first chart really that I came across to try and pick a trade from. So let's see how it goes. As I've been talking throughout today's video, I've been mentioning what's going on with market highlights today and data that we need to keep an eye out for. Just to reiterate again, 12:45, we've got the ECB. No change in policy expected, but the recent high inflation prints will lead to some commentary around the outlook for easing. More importantly, keep an eye out for the press conference that starts at 1:30. Keep an eye out for any commentary that comes out from that. At 1:30, also in the US, we have the latest initial jobless claims data. Claims fell to 340,000 in the previous week, so keep an eye out for that number. And then at 4 p.m, we have the US EIA crude inventories number. Again, stockpiles fell by 717 million barrels in the preceding week, so that'll be the key number that traders will be watching for today. That pretty much wraps it up from me. Hopefully short and sweet, hopefully giving you a bit of an indication of where we're looking at markets today and set you up for your own trading day. I'll be back tomorrow with some more, and until then,